Welcome to Commerce Gyan. Now, today we're going to start with an example. Suppose you go and buy a product from a shop. Let's say you buy an air conditioner. So when you buy the air conditioner, how does the transaction look like? You make the payment to the shopkeeper and the shopkeeper gives you a bill, right? Suppose you just pay in cash and the shopkeeper does not provide you with any bill. What will happen tomorrow? Let's suppose the air conditioner is having some problem immediately after purchase. Let's say in 5 days it stops running. So what do? Then you may have to go to the shopkeeper and claim the warranties, or maybe if there is a guarantee, correct? How now when you go to the shop, what happens? The shopkeeper says, no, I haven't sold this product to you at all. Give me the proof that I sold you this product. Then you are in a fix because you have no proof except for the air conditioner. Then you will say that, okay, this air conditioner is from your shop. He'll say, no, it's not from my shop. Prove me that you had actually paid me the money and you have bought this particular air conditioner from me. Now, at this point of time, you're going to regret because you did not take a bill, you did not take a warranty card, you did not make the payment in check or by money transfer online, right? What will you say? I will go to the court of law. Can the court of law accept your case if you don't have proofs that you have actually bought that particular product from the shop? The court of law may just dismiss your case saying that you have no evidence, right? So this brings us to a very important part of our accounting and in fact our day-to-day life also, which we call as source documents. Now, source documents are something which will give us a proof that a particular transaction has happened. These days, many people are opting for even small transactions, they do it online. So basically, at least you have a proof that you made the payment to a particular specific person. But is that enough? Many a times, no. So what are the source documents that are essential and important from the point of view of accounting? This will be our topic today in Commerce Gyan. So do watch this video till the end because I'm going to give you the updates of what different type of source documents are required in accounting and in fact in your day-to-day life to be kept so that you don't face such issues and problems. So let's begin with today's part 5 of basics of accounting, which is source documents. So just in case you have come directly to part 5 of basics of accounting, you can always watch the previous videos from the playlist. And also to get further updates, you can keep yourself subscribed to this channel. And of course, click the notification icon. Whenever I upload a video on Commerce Gyan, you will get notified and you can learn something new on it. So let's begin with understanding of source documents. Now, what are source documents? Before we proceed to the actual source documents, let's see the flow of how the accounting takes place. So what is the accounting cycle as it is called as? This accounting cycle begins with what? With a transaction. So we are going to take this with the understanding of an example. Suppose you go to a shopkeeper and you want to buy some printer papers for your office. So the transaction will be buying of printer papers and you make, let's say, the payment by Google Pay, GPay, okay? So, and amount paid is 1,000. Now, in this case, what has happened? You go to the shop, doesn't carry any value in the accounting cycle. You just maybe just have a look at all the things, all the printer papers that are kept in the shop, no accounting value. But as soon as you pick up a printer paper, go to the billing counter, you make the payment and the printer paper is bought by you. This becomes a part of your accounting cycle because this is where the transaction has taken place, right? Next, what happens when you take the printer papers in your hand and you make the transfer of money to the shopkeeper? The shopkeeper will hand over a bill to you, an invoice, correct? So that is where you will find your source document in your hand. Source document is the document which is going to actually be a proof of that particular transaction. And with the help of this source document, you are going to enter that transaction into accounting, or let's say into the journal and further books of accounts. So this source document is got from the shopkeeper. You come back to office. When you have a file of expenses, you just put that source document in the file. You may also attach a voucher, which we are going to see later, to that particular source document. Fine. Now we identify the transactions that get affected, or let's say the accounts that are going to get affected. We will make the entry in the journal, which will be the primary source of your accounting. This is how the accounting cycle has taken place till journal. Next is, then from the journal, what happens? This transaction moves further into the ledger. So first part, as we have already discussed in the previous video, the primary book of entry will be your journal, right? Once you enter in the journal, next step is enter into the ledger. After you enter into the ledger, you will close the ledger accounts, make the closing entries and everything. And then what we prepare is called as the trial balance. From the trial balance, when the year ends or whenever it is required for your organization, you will prepare the final accounts, which is trading and profit and loss account and balance sheet in general. Okay. This is how the accounting cycle revolves. Now coming to the different types of source documents, right? The source document, basically what we have seen till now is the original record of the transaction. That means the proof of that transaction. It could be different things, and you can say different formats, because in every single transaction, the source document will not be same, correct? Now, for what purpose is this source document required? Suppose you have an audit of your organization. The auditor will verify the transactions, and for verification, that auditor is going to ask for source documents, right? You say that this furniture in my office is bought by me. Fine. You are orally communicating that the furniture is bought by you. No one in the audit side is going to believe you unless and until you show a proof that you have actually an invoice showing that the furniture was purchased, and at the same time that invoice is paid or it is payable from the side of your organization. So, and this particular transaction was recorded, correct? So basically there are proofs that will be required, and this is where it is required for the purpose of audits. Now, it could be an audit for your organization from the side of a chartered accountant, or it could be a departmental audit, like we find different departments like income tax, GST, excise. All these departments also conduct audits of big firms, and these audits also require some proofs, correct, that you have actually made a particular transaction. So what documents are required? We'll see further. Third, it is like an important thing when you have some legal dispute. Suppose you have a dispute with your vendor or with your customer or with anybody, and you want to prove something, prove your point that yes, I had spent so much, or yes, I had got so much money, I had paid so much money, whatever the case is, then court of law will require some evidence. And this evidence is basically gathered from the source documents, right? What are the different types of source documents in general? With some examples to take, you will find there are receipts, you have a voucher, you have customer invoices, supplier invoices, you have purchase orders, you have time cards for employees, and you have deposit slips, check counterfoils, and n number of other source documents. We are going to tackle a few of these in the upcoming video that you have from here on. And each source document I'm going to explain in detail, showing what exactly has to be written on that source document. So carefully watch the format of that source document, why it is used, that means why the source document is used, and what type of transaction is it representing. So this is very important from the point of view of accounting. So let's proceed to the first source document. So the first source document that we're going to see is the receipt, right? Receipt, now many people must have heard in your day-to-day life, right? Give me the receipt, right? As soon as you make a payment to someone, you say, okay, give me the receipt, correct? So this is basically where you are asking for a proof that you have actually paid the money to somebody. So when you make the payment online or through a bank, you may not need a cash receipt because that payment itself acts as the receipt. Or if you have an invoice that they have given, a bill they have given, and you show an online transaction where you have transferred the amount to them, to that particular shop, to that person, that proves as a sufficient evidence. But if you make the payment in cash, then it is absolutely necessary to take a cash receipt. Okay. What is the content of a cash receipt? Now, when you are actually an organization taking a cash receipt, or you are an organization giving a cash receipt. So if somebody makes a payment to you, you have to issue a cash receipt. If you make a payment to someone, then you have to take a cash receipt. Got it? So this is how transaction will happen. Suppose now I am acting on behalf of my business and I have to issue a cash receipt. I have to give someone a cash receipt. What are the different things that I have to fill up in this cash receipt? Look at the format. You will see that it clearly mentions on top. You will find here your company name, firm name will come, address will come. If you have a telephone line number, mobile number, whatever, all this will be the heading part of it. Then you have the mention of receipt. That means you are showing that you have this as a receipt being issued. Number is very important. So numbering will be serially numbered. So as soon as the year starts, you will begin with number 1, 2, 3, 4, 5, 6, and serially you will issue the cash receipts. Okay. Date is important because the transaction date is the one which will be entered even in your journal ledger and further accounting. So number is important, date is important. Receipt with thanks from. So if I am taking money from someone, that name of the person should be mentioned here who paid the amount in cash, right? So received with thanks from so and so. Then sum of rupees. So rupees will be mentioned in words here. And if you see below, there is a blank box with a rupee symbol. This is where you can see that you have to fill the amount in numerical format. Then it is a receipt for cash or demand draft or check. Some organizations are very well maintained in terms of accounting. They will even give you a receipt for online payment. They will also give you a receipt for check payment. So if you have made, let's say you go to a simple grocery supermarket or so, and you swipe your card or you make a Google payment or you use Paytm or whatever. And this is basically once you make the payment, the amount is transferred from your account and the person pulls out a bill and hands it over to you. Just go through that bill once, you will often see that paid word is mentioned. So that paid word, that invoice and paid by cash, paid by whatever format, online mode, paid by credit card, all that will appear on that invoice itself. So that serves as your receipt. Right? So basically the receipt shows that you have made the payment, or if you are issuing a receipt from the side of business, it shows that you have received the money from a specific person. And remember, the last part of it is very important, where it is saying towards. Towards means for what purpose have you received the cash? Very important, because if you are writing in the books of accounts and this is altered, that means if you receive cash for the purpose of goods you have sold and you mention your received cash towards repairs and maintenance, it is wrong, right? You have received cash for what purpose? For goods sold. You are not receiving cash for doing some service of repairs and maintenance, correct? So if you are mentioning this wrong, your entire accounting will go wrong. Fine. So why have you received the cash? That has to be mentioned in this two words. Okay. So organization will give a cash receipt and also write down why you have received the cash, from whom you have received the cash, how much cash is received, and on what date the cash is received. Correct. And importantly, this cash receipt has to be signed by whom? By an authorized signatory. So in general cases, when you're talking about a sole proprietary concern, this authorized signatory will be the proprietor or the manager of that business. So it should be signed. Without a signature and a seal of that organization, this cash receipt has no meaning. Many people make this mistake where they say that, okay, I had a filled up cash receipt and I got it. That's not enough, because tomorrow you can also print this and write down whatever you like and say, okay, this organization gave me this cash receipt. No, you can't. When will the proof exist that this cash receipt was actually issued by a specific organization? Only when that authorized signatory has signed on it. Now, many organizations you will find they just give a print and they just give you without a signature. Tomorrow, if there is a dispute, remember that will not account for an evidence which is strongly proven in the court of law. So, if you are giving cash to someone and you don't get a completely filled up cash receipt, remember it has no documentary meaning. Secondly, if you are an organization and you're giving somebody cash receipt, you have to fill up all the details and also sign, stamp. Your organization seal is also required. Fine. So this is the first source document that is generally an acceptable evidence for the purpose of accounting and for the purpose of any legal matters. Next source document that we have is a voucher. Voucher is basically in terms of payments made. So your organization has undertaken some activity of repairs and maintenance, and you're supposed to make payment of money to someone. It could be in cash, it could be by check, whatever reason. But this is an accounting document where we call a voucher as for the purpose of payments. So any payment you make, you have to prepare a voucher. Any receipt of money you have to prepare a receipt. Okay, it could be cash, then cash receipt. If it is normal, then normal receipt. So receipt is for, as the name suggests, for money received, and voucher is for the purpose of money paid. So your organization has to prepare a voucher every time it makes a payment. So without a voucher, that payment will not have the justified details that are required for, you can say, accounting purpose. So what are the details here? Again, this is basically having a date, right? The voucher has a date, very important. Voucher number is important. File number, in case you have making separate, you can say, files for different heads of accounts. Like I have one file for office expense, one file for repairs maintenance, another file is for any kind of purchases made, and so on. So file number is important for hunting down that file which is containing the voucher of a particular type, correct? Then comes your name, address. Whose name and address is put here? Is it the name and address of the organization, or is it the name and address of the person to whom you have made the payment? This name and address is of the person to whom you are making the payment, correct? So suppose you have let's say some repairing work, let's say some electrical fitting work has been done in your organization. You had some problems, and because of that, an electrician came to your office and he cleared the issue, and you made a payment of 500 rupees to the electrician in cash. So 500 rupees paid has to be immediately you have to prepare a voucher. On that voucher, you will mention the name of that electrician. You will mention his address if at all required, full address, mobile number or anything if you need. Then you will mention debit, credit, which head of account will be debit. That means basically if you are preparing the voucher for the purpose of repairs and maintenance, you will mention repairs and maintenance. Okay, so head which you are debiting will be repairs and maintenance, correct? Then comes your particulars, whether you paid in cash, whether you paid in check, all the details have to be mentioned in particulars. Amount column will show what amounts are paid. Rupees in words, which is here, rupees in words will show the amount in words, right? And prepared by, passed by payee's signature. Prepared by means, suppose you have a bigger accounting department. It is one clerk may prepare, a clerical activity may be done of preparation of the voucher, because people will go to him and say, okay, you have to pay me so much amount, just prepare a voucher, and this voucher will go for approval in the further accounting department. So passed by means it is approved, it is checked, and that amount which has to be paid is approved. So passed by is approved by, you could say. And finally, you will say P is signature. So as soon as you make a payment to someone, what you have to do, your duty is to take his or her signature. So as an organization, if you don't take the signature of that person, tomorrow he can come back to you and fight, saying you did not make the payment to me against a particular bill. So in that case, preparing a voucher is very essential, specifically if the payment is made in cash, right? Because cash will have no documentary trail. If you have paid by check, at least you can take out a statement and then show that, okay, this is the entry, and against this I have made your payment. But if you are paying by cash, there will be no evidence except for the voucher with his signature. So taking a sign in any case, whether it's check payment, whether it's cash payment, is essential for acting as a strong documentary evidence for payment. So hope that part is clear. When you're preparing the voucher, you have to remember these things have to be filled up in the voucher. So next source document that we have is basically the invoice, right? In case of invoice, now what do we have? When you buy goods, okay, it could be either when you buy goods or when you have a sale. So when you sell goods or when you buy goods, you will need to prepare an invoice or get an invoice. So the question of invoice will come when you buy goods, and the question of invoice will come when you make a sale of goods or sell goods. Now, invoice is prepared, so we can put this as sales invoice. This is prepared by whom? By the seller. And if you are a buyer, what you have to do? You have to get invoice. You don't have to prepare an invoice. What will you have to do? You will have to get an invoice. Next important thing, when you are actually preparing the invoice, let's suppose you are preparing a sales invoice. When you're preparing an invoice, important things that will be on the invoice will be the name of the party, right? That means this will, if it is a sale invoice, I'm going to first speak of a sale invoice which you are preparing. So here, Evol, ATIS, whatever it is, that will be the name of whom? Of the seller. So the heading of that particular invoice, the seller will put his own, you can say, brand name and logo here or on top, right? As well as at the bottom sometimes. Now he will write your billing invoice, or he may just put it as invoice. The invoice will also be termed as tax invoice. When do we write tax invoice? You will write tax invoice when you are issuing it for the purpose of GST, right? Goods and service tax. So many a times the tax invoice is also mentioned. Then here you will find you are having the details of seller, his phone number, his address, if he's registered for GST, you will find your GST and number is mentioned, right? On top, you will find your invoice number, date of invoice, customer ID means if you have a regular customer, he may be allotted an ID. Due date is also mentioned just in case you want to tell by what date you are supposed to pay. Then bill to and ship to. Now, when you're making a sale will be made to a specific person. So here, this is the buyer's detail, right? This is the seller detail. So seller's detail will be appearing here, buyer's detail are appearing here, and shipped to will be different. So if you're shipping or if your courier is going to some other person, then it will be shipped to. So buyer may request that to the seller that you sell the goods to me, I will take the invoice, I will make the payment to you, but don't send the goods to my place, right? Send the goods to somebody else. then that will be a different shipping address. Ship address may be different. In this case, both the addresses are same because bill to is to Tech Guru Plus and your ship to is also to Tech Guru Plus. So there is no issue here at all. Buyer and seller are buyer and the person to whom it is shipped to is same. Consignee, as we call it, are same. Now you have your serial number, item name, HSN code as required under GST, quantity, unit rate, per quantity, that means per unit, how much is the price of the commodity, and finally the total amount. This is the basic price of the commodity where you take a total of all the commodities sold. Then you apply whatever taxes are required. So uh, whatever applicable taxes will be written here, and finally you will have an amount which is the called as the gross total, right? This will be a gross total amount. So gross total amount will be including the taxes. And importantly, if you see here also, you need a signature of the person. So authorized signatory will be here written here very clearly. So that is also important. Fine. So hope this is clear. You have buyer, seller. When who will issue an invoice? The seller is going to issue an invoice. Buyer's details will be mentioned on the invoice with all the details. Right. So suppose you are a buyer. Where will your name appear? Your name is going to appear here. Ship to will appear here and seller details will be here. Suppose you are a seller, your details will appear on top and whom you are selling to will appear in these two things, bill to and ship to, correct? So you may also have other, you can say details as we see here below, there are some policy details and all mentioned, mobile numbers, email ID, exact are given here. So this is how the invoice is prepared and sent. Now remember, when you prepare an invoice, it is necessary to be sent with your goods. So if you are selling the goods, you will have to attach this particular invoice and give the goods. So the person receiving the goods will enter this invoice and make the payment to you. Sometimes here you will also find, you can say the amount which is paid in advance will be reduced and given. Sometimes you will also find that there could be other details mentioned, like suppose 50% advance, 50% will be paid later or whatever. So different additions can be made to this invoice as per the requirement of the organization. This is a basic format. It's not conclusive, but at least these details have to be there for your organization. In some cases, you will not have the GST number. So here you will find this GST which is mentioned. It's not necessary that everybody will have GST number. There is an exemption limit which is declared by the government. So this GST number may be missing also, but you will have other details which are mentioned. So this is basically the invoice. If it is GST which is mentioned, the number is mentioned, then necessarily the heading will state tax invoice. You have to mention tax invoice in case you have a GST number. If you don't have a GST number, you can mention it just as invoice. Okay. No need of writing the word tax. This will be the source document for what purpose? As we know by now, for the purpose of selling goods and as well as for the purpose of purchase. So if you are selling goods, you have to prepare it. If you are buying goods, you have to get the invoice from the seller. The invoice, now we are proceeding to an important and a very, it's not just important, but it's sometimes very confusing for people when they talk of debit and credit note. So what is a debit note and what is a credit note and how does it act as a source document and for what purpose? All this we are going to understand ahead. Now, first thing, let us understand the debit note part. Now, debit note is what? Debit note, when is it prepared and why do you need a debit note? First of all, if you see the term says debit, fine. So when do you debit a particular person's account? When you have already made some credit, then you will debit his account if at all you want to reverse a transaction, correct? So a debit note is basically prepared for purchase return. This is something you need to understand. It is prepared for what purpose? For purchase return. So you have already bought some goods. When you buy the goods account is debited and the seller's account, that means the person who has given you the goods, his account is credit. Now, when you are returning the goods, the obvious thing is that the seller's account, that means the person from whom you have actually bought the goods, his account will be debited. Earlier you had credited his account, now it will be debit. So this is basically purchase return. That time the buyer of the goods prepares it. Buyer prepares debit note. This is important to remember. So who prepares a debit note? A buyer of a particular product. When he returns those goods, he will prepare a debit note. Now, what is the format and how does the debit note look? The debit note is exactly a replica of your invoice, except for that in this case, you are going to now put the terminology here as debit note instead of invoice. Here you will put debit note number instead of invoice number, right? And what you need to also mention is against invoice number so and so date. So you had earlier, let's say you had an invoice number 52, which was the original invoice. Now in this you had a quantity of 1000 goods numbers, which out of which now you return goods, let's say 50 goods to that same supplier. Now this invoice number 52 is recorded in your books as purchase. This is your purchase. Now against this purchases, what you did, you made a return, purchase return. 50 numbers or 50 is the quantity of goods that you had returned. Now remember, in this case, purchase returns can be for a number of reasons. It could be that you ordered extra and the person is ready to take back the commodities, or it could be that it is of defective quality. The required quality is not given by the seller of those goods, or whatever reason. So it could be a dispute on pricing. Whatever the case is, you may return some goods. When goods are returned, what do you do? For this purchase return, prepare debit note. Now, debit note will act as an evidence that you are returning the goods. The goods will accompany the debit note. Fine. Whenever you give it to your supplier, you're going to send this debit note along with the goods which you are returning. And when he acknowledges this debit note, it acts as a proof that he took back the goods which you had returned. Fine. So all the details, if you see here also, they are mentioning the details as the name of who is preparing the debit note on top, for whom it is prepared, this name, address, GST number, etc. is written here. Then what are the goods or things that you are returning back, the details of them are mentioned here. And finally, there will be a taxation and other related details and terms and conditions, bank transfer details and signature. Okay, signature is also essential. If it is not a computer generated invoice, you will generally need to sign it. If it is computer generated, these days people don't sign the invoice, but they just mention that it is a computer generated invoice and requires no signature. So that's also enough. Here, so if we are talking about the source document as such, source document is, this is debit note is an evidence for what? For the purpose of purchase return. Remember this. So if you buy goods and you return goods, what do you have to prepare is a debit note. Similarly, if you had sold goods and you want to return those goods, you will need to prepare what is called as credit note. So who prepares a credit note? By seller. Seller prepares a credit note and buyer prepares a debit note. So do you think that in every return, so suppose you are the one who is buying goods and you return the goods, you are the buyer, you prepared a debit note. Is that sufficient? It will not be sufficient because the seller also at his end has to prepare a credit note. You as a buyer have to take the credit note, and you as a buyer have to issue this debit note. Okay, so both the notes are required for every single transaction of return. Suppose you issue a debit note, but the seller fails to give you the credit note, then this is wrong. He also has to give you a credit note, and when he's taking a debit note from you, it should have the other side also, that is a credit note. Have you got it? So debit note and credit notes are basically for the purpose of return of goods. When is debit note prepared? Debit note is prepared when you return the purchased goods. And when is credit note prepared? Credit note is prepared when you return the sold goods. So you have sold goods and now somebody has given back the goods. What do you prepare? You prepare a credit note. When you have actually bought the goods and you are returning the goods, these goods will have an accompanied source document of debit note. Hope that is clear, debit note and credit note. Next, you can see your checks. Now, checks are these days not very commonly used because we are now opting for online transactions. There are bank-to-bank transfers which are made, but yet a check is still is a required document in certain cases, and so it is a source document in terms of bank transactions. Now, check will be issued by your organization, and what are the details that you normally mention on a check? You will have to mention the name here will be there, to whom you are making the payment. Amount in words will be mentioned here. You will mention the, let's say in figures here, let's say 10,000. And your account number will be already printed, right, by the bank. You will need to sign here. If it's an organization, a current account is here. There will be a stamp of your organization. Date is a very important part. And you will find here the details of bank, whichever branch of State Bank of India, whatever bank you are having this check for. Okay. Now, important thing in the case of a check is that if you don't want somebody else to withdraw the money, you will need to cross the check. These are the two lines, and if you write your account payee, this check becomes more secure because it will go to exactly the account of the name of the person whom you have mentioned here. It will not be a withdrawable amount. It will go to the account of this person. Now, if you issue what we call as a bearer check, bearer check is generally issued when you just bearer check is just issued when you want to withdraw the amount, when you want to just withdraw amount without transferring it to account. Okay, withdraw. You just want to withdraw and amount is withdrawn by a specific person. So his name is mentioned. No account payee is mentioned. It is not an account pay check, remember. It will just be called as a bearer check. There will be no double lines, crossing lines mentioning account payee, because if you cross the check, this is called as crossing the check. If you cross the check, it will go into the account of the person. If you don't cross the check, it will go to anybody who has that instrument. So if tomorrow a check is given in the name of, let's say, SS Enterprises, okay, if tomorrow the check is given in the specific person's name, let's say it is given in the name of Sanjay, and it goes to Dhananjay, that check, Sanjay loses the check and the check goes into the hands of Dhananjay. Then also the person may represent himself saying that, okay, I'm the holder of the instrument, and the bank will have to issue Dhananjay the amount, right? Because the check was not crossed. The name is mentioned Sanjay, but even Dhananjay can encash that particular check by just signing at the back of the check with his name. Got it? So bearer of the check, if it is bearer check, then it is a little risky. If you lose the check, anybody can encash it. So the best way possible to issue a check is by crossing the check and putting the word account payee. Got it? So this is a very safe mode of transaction if at all you are using the check. Fine. Next instrument that we have is what we call as a deposit slip. Now, whenever you go to deposit this particular check in the bank, you will have to put details of, you can say, the transaction. You will have different things that you need to mention on the deposit slip. Specific important things are the account number. You will have the date when you're depositing. You will have to mention the name in whose account you are depositing the money or the check. You will mention here the bank name which is written on the check. You will have check number mentioned here, correct? Branch of that bank, right, where the check is there. And then amount is mentioned, rupees and paise if at all. This is what you will need to mention. If you are depositing cash, then you will have to just mention cash, right, and amount. Here also, if you see the same details I mentioned, there will be a line here. When you go and take a deposit slip to the bank, you will have account number and other details like where you see mobile number, date, the bank name, check number, issued by the branch and all, everything. You'll mention your amount, right? Deposited amount and name and signature will be written. So you'll have to sign here if you would require to attach. And this deposit slip will have the check which you are depositing attached to this, correct? When you go to a bank, you will have to fill up all these details and you will have to attach the check which you are depositing. In case you are depositing cash into the bank, then what you have to do, you have to take this deposit slip with the cash, and then you will be given this particular counterfoil will be returned. Okay, so the cashier or the banker will return this particular counterfoil with a stamp and sign, right? So stamp and sign will be put here and they will give you this counterfoil as an evidence that they had this particular deposit transaction made by you. Now, if at all you are depositing cash into the bank, see here you will see the denominations, different denominations. You will have 2000 rupee notes, you will have 500 rupee notes, and you will have to put the denomination. How many 2000 rupee notes? Let's say 2. 500, how many? 10, like that. 100 rupees if you are depositing 100 notes. Then you will multiply and write the amounts here and take the total. So this is how a deposit slip is filled. And what is going to have, I mean, if you are an organization, the evidence, the source document for you will be this particular part. This will act as a source document. This will go to the bank. So this is not a source document for you. For you, the source document as an organization will be this particular deposit slip part of it, which is showing the evidences that the check or the cash was deposited, right? So if you are verifying the transaction or if you are recording a transaction of cash or check deposit, this is what will act as a proof of the deposit. Fine. Document. Now we have a number of source documents. I mean, if I have to make the video, it will go on and on and on when we are having source documents prepared. But a few other source documents, these were the important ones, of course, which every now and then appear in accounting. Now, what we are going to see is some other source documents, a list, and in short, I'm going to explain them to you. So what are the other source documents? The other source documents will be bank statements. Now, bank statement, of course, everybody knows you have a passbook given by a bank, or you may have an email statement which is delivered in your email by the bank. This is a source document and evidence where you can use this as your, you can say, a cross-checking of the transaction which you have done. So suppose you made a payment to someone, you can tally it, you can check it with your bank statement and see to it that yes, okay, bank statement is also showing the same transaction on the same date, and this can be recorded in my books of accounts. So bank statement can act as a source document which is used to verify the transaction. So as you made a payment to someone, where do you what is your first source document? Your first source document will be the voucher and the supporting bill, right? Because it will not be the bank statement. The voucher, immediately the voucher is prepared, it goes into the journal. And this journal entry can be cross-checked with the help of the bank statement. Bank statement is not your entry, you can say method. Bank statement cannot act as a source document for entry. Entry can be done. Entry, when it is done, it is already having a source document of supporting document of vouchers, receipts, bills, etc. Got it? Next is evidence of credit card payments will be your credit card receipts. Or if you have made a debit card transaction, you have a small slip which is given by the store and you can just attach that as an evidence of payment. Then comes, you can say if you are making a salary, then comes the part of salary. So when an employee is given the salary, he is given on the basis of his attendance. So if an employee has worked for, let's say, 10 days out of 30, will you give him a salary of 30 days? No. You will give him a salary of only 10 days. So that 10 days which the salary is given for, how do you know he came only for 10 days? It's based on what we call as timekeeping or time cards, log records, payroll records. These days we have biometrics which keep records. So employee data is recorded, his attendance, his or her attendance is recorded, and this is what can act as a source document for computation of salaries. And also when you are cross-checking whether the salary which was paid to the employee and actual attendance of the employee match. Right? There could be a number of other benefits also of keeping your payroll records, which we can see in a separate section later. But right now, remember that if you have to have a salary record to be verified, you can go to the payroll records, you can go to log records, or there are time cards as we call it. Got it? Then comes GRN. GRN is what? Goods Receipt Note. Goods are received by an organization. They issue what we call as GRN. So this is a note which the organization gives for the purpose of, you can say, acknowledging or accepting that the goods are received in the organization. So goods received note is generally done in bigger organizations where they have a security guard at the gate, and you will find that the accounts department is way inside, far away inside. They cannot acknowledge immediately. So as soon as the goods are delivered at the gate, the security guard issues, he checks the invoice what is given. Once that checking is done, he will issue what we call as goods receive note. Fine. So this is again an important source document for your organization, evidencing that you had made a sale of goods to that particular organization. So they have acknowledged that your goods are received. Next is if you are having what we call as exports. If you are exporting your goods, then you will have to keep what is called as the bank advice or foreign remittance advice. This is something which shows the currency in which you have transacted. Suppose you had transacted in USD, you have transacted in JPY, you have transacted in maybe euros, pounds, whatever. So if you had made a particular transaction in a specific currency, there will be a conversion rate applied. So Indian rupees, suppose you're talking of US dollars. US dollars maybe 1 USD is equal to 84 Indian rupees. So 1 USD, 84 Indian rupees, all this will be mentioned on the bank advice, and whatever converted amount that you have got, let's say you got $1,000 in your account, you don't write $1,000 because we have to convert it in Indian rupees. Our books of accounts are written in what currency? In Indian rupees. So you cannot record 1,000. You have to convert it into Indian rupees by multiplying that 1,000 by 84. So we have 84,000 rupees received in our account, right? And this 84,000 worth of amount will be mentioned in bank advice. They will also have deductions for bank charges, for conversion rates, conversion charges. So all that will also be seen in your bank advice. Got it? So that is a source document for recording the commissions, for conversion of foreign currency, and so on. Then if you are having exports and imports of goods, you will have additional documents which are bill of export and bill of entry. So if you are actually shipping the goods to another country, then you will have to have a bill of export. you will have an airway bill if at all, right? So how do you ship? By some method of transport. It could be ship, it could be air, it could be cargo, whatever the case is. So you'll have some bills which are prepared by the customs authorities. We can call it like a customs check, which is done with the help of this document, where they mention these goods with this value, on a specific date from a specific party. All that will be mentioned, and it will be sent out of the country if you're selling. Second, if you're buying the goods, also there will be an evidence which is called as a bill of entry, where you have bought the goods into India from a specific country, and all the permissions and all the required customs duty, tariffs, etc. were paid. So that is where you will have a bill of entry. Or there will be, if it's by air, it will be an airway bill. So this is a very important evidence, because imports and exports have to be backed by this. Otherwise, if you have bought it without a bill of entry, or you have shipped it without a bill of export, then it may act as something which is called as a smuggled product. This could be treated as not legal, or there could be legal hassles ahead. So you have to be careful if you're doing business and you're importing or exporting goods. You need all the formalities to be fulfilled. Finally, there's one more new term which was introduced since the year 2017, which is e-way bills. Not 17 also, it came a little later, but it was introduced in the act that there will be e-way bills, and it came a little later in GST, where you will find that whenever you are transporting the goods or whenever you're selling the goods, either the seller of the goods, or it is the transporter of the goods, or even sometimes the buyer of the goods, when they are taking the goods out from one area to another, certain specified kilometers and other things are mentioned. What they're supposed to do is they are supposed to prepare what we call as a GST e-way bill. E-way bill acts as an evidence of your sale, right? E-way bill can also act, e-way bill has to be matched with your sales records. So if you have sold the goods and you don't prepare an e-way bill, that will be a violation. So this, again, you can just so this can have a separate video section on it on GST e-way bills, but just remember, this is an evidence of your sales. It's like a transport record that goods were actually sold and transported from one place to another. Okay. So hope these source documents are clear now. So hope all these source documents are clear to you, and remember that this is an important section, because you have to remember to keep these source documents in hand. If you don't keep the source documents in hand, you will have problems ahead in proving that you had accounted for a genuine transaction. So after completing the details of source documents, now remember that there's going to be another video which is coming up, part 6 of Basics of Accounting series. Now this will be again on journal entries. So these journal entries will be more of connected with more complicated journal entries, like we'll have those which are talking about discounts, like trade discount, cash discount, free samples, then how to treat the loss of goods, and so on. So when you practice these entries, it will give you a wider, you can say, understanding of journal entries, and you will be more clear on different complicated journal entries. So hope to see you in the next upcoming video of part 6 of Basics of Accounting. Thank you.